Hello everyone, welcome to the 97th episode of me learning how to trade in Forex. So in the last video we went through how the stock market affects the Forex market. A stock market index is simply a curated basket of certain stocks. This list of stocks is a way to get a broad measure of what's happening in the stock market. And then we went through how the Nikkei and USD and JPY compares against the correlation between USD JPY and the Dow. Yeah, that's what we find out basically. So also don't take correlations for granted because they aren't a surefire thing. That's that. And now we're on to how to use Euro JPY as a leading indicator for stocks. So how to use EUR/JPY as a leading indicator for stocks. 0604, how to use Euro JPY as a leading indicator of stocks. Right, okay, so as we said earlier, in order for someone to invest in a particular stock market, one would need the local currency in order to purchase stocks. You can imagine the effect that stock markets like the DAX, that's the German stock market, have on currencies. In theory, whenever the DAX rises, we can probably expect the euro to rise as well, as investors need to get a hand on some euros. While the correlation is imperfect, statistics show that it still holds pretty accurately. We here at bbpips.com did a little research of our own and found out that Euro JPY seems to be highly correlated stocks market across the globe. EUR/JPY seems to be highly correlated to the with stock markets across the globe. You should know that the yen along with the US dollar is considered to be safe havens amongst the major currencies. Yen and the dollar is considered safe haven amongst the major currencies. Whenever confidence in the global economy is down and traders are fearful, we typically see traders take their money out of the stock markets, which leads to a drop in the values of the DAX and the S&P 500. With money flown out of these markets, we usually see Euro JPY fall as traders run for cover. On the flip side, where the sun is bright and risk appetite is rampant, investors pour their money back into the stock markets, which in turn leads to a rise in Euro JPY. Euro JPY fall because less people are trying to convert their JPY into the euro in order to buy the stocks. But if the stock market is good, then more people are going to try to convert their domestic currency into the euros. So therefore, there's going to be an increased demand for euros, which increases its currency value. So euro is going to strengthen against JPY. If economy isn't good, traders take out their money from the stock markets and EUR/JPY usually falls. If economy is good, traders place their money into the stock markets and Euro JPY usually rises. Take a look at the charts below to see the correlation between the Euro JPY and the DAX and the S&P 500. So S&P 500, which is the blue line, Euro JPY, which is the red line. The correlation. So what can we see? As the S&P 500 falls, wait, S&P 500. So the only bit that's correlating is pretty much this bit here. When this bit falls, that bit falls. However, this is still like inverse correlated. So Euro JPY rises as the S&P 500 falls. For DAX, okay, this is kind of correlated. So this one goes up, this one goes up as well. So as DAX rises, which is the blue line, Euro JPY also rises, which is the red line. And then as DAX, the blue line falls down here, Euro JPY also falls down here. Yeah, kinda. The correlation seems to have held well this past decade, as Euro JPY and both index rose steadily together, until 2008 where we hit with the great financial crisis. I don't know about pre-2008 about this rising and falling together though, so... Right, okay. Intermarket analysis cheat sheet. Intermarket analysis studies the relationship between asset classes, typically currencies, bonds, commodities, and stocks. Intermarket analysis studies the relationship between asset classes, specifically, typically, currencies, bonds, commodities, and stocks. It can help traders generate broader trading ideas, reveal potential market turning points, and confirm other analysis methods. So intermarket analysis can be used to help traders generate broader trade ideas, reveal potential market turning points, or confirm other analysis methods. The price action of currencies is often driven by their relationship with commodities, bonds, and stock indices. The price action of currencies is often driven by their relationship with commodities, bonds, and stock indices. For example, here are some traditional intermarket relationships. A falling US dollar is viewed as positive for commodities prices, while a rising dollar is considered negative for commodities prices. So falling US dollar is viewed as positive for commodities prices, so as falling US dollar, what does positive mean for commodity prices? So it's good for commodity prices, whereas a rising dollar is considered negative. Falling bond prices / rising interest rates tend to be negative for stocks, whilst rising bonds / falling interest rates are normally good for stocks. Rising commodity prices are historically a sign of economic growth, which is good for the stock market and negative for the bond prices. Woo! That's a lot of intermarket relationships correlations to remember, and that's just a couple of intermarket relationships examples. Here's a neat one-page cheat sheet for you to bookmark and make it easy for you. Wait, so traditional intermarket relationships. Falling USD is viewed as positive for commodities prices, while a rising USD is viewed as negative for commodities prices. Falling bond prices / rising interest rates. Rising interest rates tend to be negative for stocks. While rising bond prices / falling interest rates are normally good for stocks. Rising commodity prices are historically a sign of economic growth. Rising commodities prices are normally a sign for economic growth. Which is good for the stock market, but bad for bond prices. So that's a lot of intermarket relationships to remember, and that's just a couple of intermarket relationship examples. Here's a neat one-page cheat sheet for you to bookmark and make it easy for you. Right, okay. If gold rises, then USD falls. Why? During times of economic unrest, investors tend to dump the dollar in favor of gold. Unlike other assets, gold maintains its intrinsic value. If gold rises, AUD/USD rises as well. Australia is the third biggest gold producer in the world, selling out about 5 billion worth a year. Right, okay, so if gold rises, then USD falls. If gold rises, then AUD/USD rises. If gold rises, then NZD/USD rises. New Zealand ranked 25, also a large producer of gold. Right, okay. If gold rises, then USD/CHF falls. Over 25% of Switzerland's reserves are backed by gold. As gold prices go up, the pair moves down. CHF is bought. Right? If gold rises, then USD/CAD falls. Canada is the 5th largest producer of gold in the world. As the gold price goes up, the pair tends to move down. CAD is bought. Yeah, because USD is weakening against the CAD, because you could use less CAD to buy 1 USD. Yep. If oil rises, then USD CAD falls. If Canada's one of the top 5 oil producers in the world, it exports around 5.5 million barrels of oil a year to the US, a day to the US. Jesus, 5.5 million barrels of oil a day to the US. As oil prices go up, the pair moves down. As oil prices go up, the pair moves down. If gold rises, then EUR USD rises. Since both gold and euro are considered anti-dollars, if the price of the gold goes up, euro USD may go up as well. Anti-dollars. So this is when you're using more USD to buy 1 euro. So if gold goes up, then you need more USD to buy 1 euro. Okay, so if bond yields rises, then local currency rises. An economy that offers higher returns on its bonds attracts more investments. This makes its local currency more attractive than that of another economy, offering lower returns on its bonds. If Dow falls, Nikkei, NIE KKEI falls. The performance of the US economy is closely tied to Japan. If Nikkei falls, USD JPY falls. So you're needing less JPY to buy 1 US dollar. Investors consider yen as a safe haven and tend to seek it during periods of economic unrest. So Nikkei is a stock market. If Nikkei falls, that means less people tend to invest in the stock market, so they start buying yen back up again. So then if everyone's starting buying yen, then its demand should rise, which increases the currency value. So therefore you would Japanese yen is strengthening against the US dollar, so you would need less JPY to buy 1 USD, so therefore the value of USD JPY falls. Okay, yep. Quiz time, using equities to trade FX. Equity markets can be used to help gauge currency movements and global risk sentiment. Do you know how to use it to help your currency analysis? Let's find out. How does a country's stock market outlook influence its currency? A strong stock market outlook tends to be bullish for its currency. Yeah. True or false? Money tends to flow into the economy while stock markets performing worse than those of the other economies. Money tends to flow. False. True or false? Only industrial sector companies are included in DJIA. That's false, isn't it? Which US stock market index is considered to be the best barometer for the broad US economy and used to predict its direction? I think it's the Nasdaq, isn't it? Oh, never mind, it's the S&P 500. Which of the following companies is included in Nikkei? Toyota, Fuji, Honda, I think all of the above. Yeah. The principle that the stronger the stock market, the stronger the currency usually holds true for most currencies except for... So, even if it has a stronger stock market, the currency isn't necessarily going to become stronger. So even if it has a stronger stock market, the currency value isn't necessarily going to become stronger. What? Which one is that? I don't really know what this one is, to be honest. Euro JPY. So anti-dollar. That's gold and euro is anti-dollar, but I don't get how that's... Is it this one? Okay, I don't know that one. True or false? Stock markets all over the world generally move in the same direction. False. Oh, never mind, they do? What global phenomenon changed the behavior correlation between the USD/JPY and the Nikkei? The global financial crisis. Which currency pair is typically used as a barometer for global risk sentiment? Euro/JPY. When the global currency economy is down, how does Euro/JPY usually react? So I think more people are going to buy the JPY, so causing JPY to strengthen against the euro. So if it strengthens, then this value you're going to need less JPY to buy 1 euro, so Euro/JPY tends to fall. How does rising gold prices tend to influence AUSD? So you're going to need more USD to buy AUD. So if you're going to need more, then it's going to rise. Which of the following pairs can be a good proxy for trading your bias on a Nikkei? Good proxy. USD/JPY? Okay, what was the ones I didn't get? That one I got. I think this is false. False. This is the S&P 500, isn't it? Yeah. All of the above. Okay, so the strongest stock market. So the first time we went Euro USD, that's not right. Euro and JPY? Nope, it's the last one. So what was the last one? False. False. S&P 500. All of the above. USD and JPY it is. The stronger the currency usually holds true for the stronger the stock markets, the stronger the currency. So the stronger the DAX, the stronger the euro. But it's not always true for the stronger the Nikkei or the stronger the JPY. The stronger the currency usually holds true, except I see USD and JPY. What? Stock markets generally move dangerous. That's true apparently. The global financial crisis. Euro/JPY. If it goes down, it tends to fall. Supports higher. USD/JPY. Okay. I still don't get how USD and JPY is like, even though the economy is stronger, it's not gonna it's not gonna result in a stronger currency. That's what I don't get. Okay. Anyways. The Forex Trader's Guide to Major Economics. Today we're going to take a trip around the world, but it ain't going to take 80 days. If you're fast enough to keep up, we can probably get around in just 80 seconds. Not. In any case, we'll make sure you learn about the nitty-gritty of each major economy and what makes its engine go. For each country that we'll be touring, we'll start off with a quick peek at the important facts and figures, followed by an overview of its economy. Once that's out of the way, we'll visit the country's central bank to find out some of their secrets. In this section, we will explore the powerful monetary policy tools that central banks use to try and manage a country's economy. Hopefully we'll stumble into the room where they keep their printing plates and we can sneak out the back door and sell it on the black market. We're kidding, we're here to teach you how to trade currencies the legal way. After that, we'll discuss the important characteristics that differentiate that country's local currency from all the rest, as well as hard-hitting economic indicators for that country. To keep the trip interesting, we'll be dishing some trivia every now and the trading tactics that will prove useful later on when you go off on your pip catching adventure. And as we promised, this very exclusive field trip is covered by your scholarship. No need for travel visas and no need to buy travel fanny. Pack light, because all you need is your hunger for more learning. Are you ready? Let's get this show on the road. Hey. Right. United States of America. The United States of America is comprised of 50 states and a federal district. The majority of the country can be found in North America, but the United States also has some territories in the Pacific. Since its independence from the UK on the 4th of July back in 1776, the US has become an economic superpower not just in the West but also in the whole world. Being the world's largest economy, the US plays a serious role in the global market. Just about any economic development in the US, such as the rise and fall in consumer spending or an affair by its president that is made public, could create quite a hefty impact on economies all over the world. United States, facts and figures. Neighbours: Canada, Mexico, Puerto Rico, Cuba. Size: 3,794,101 square miles. Population: 309,349,689. Oh no, 309,349,689. Density: 87.4 people per square mile. Capital city: Washington, D.C. Head of government: President Joe Biden. Famous influencers: Kim Kardashian, Charlie D'Amelio, Jenna Marbles, Logan Paul. Okay. Currency: US dollar, USD. Main imports: industrial supplies, crude oil, etc. Capital goods: computers, telecom equipment, automobile parts, office machines, electric power, machinery. Consumer goods: automobile, clothing, medicines, furniture, toys, and agricultural products. Main imports. Main exports: capital goods, transistors, aircraft, automobile parts, computers, telecom equipment, industrial supplies, organic chemicals, consumer goods, automobiles, medicines, agricultural products, soybeans, fruits, corn, Barbies, Xbox consoles, and Apple AirPods. Import partners: China 19%, Canada 14.1%, Mexico 12%, Japan 6.4%, Germany 4.7%. Export partners: Canada 18.9%, Mexico 14%, China 7.2%, and Japan 4.5%. Time zones: GMT -10, GMT -9, GMT -8, GMT -7, GMT -6, GMT -5. Website: http://usa.gov. So GMT -10 to GMT -5, so somewhere over here and somewhere over here could have a 5-hour difference. That's kind of mad. Economic overview. The US is widely considered to be the richest country in the world, producing about 16.24 trillion in output in 2012. It ranked 13th in 2012 in terms of per capita income. That's just the country's total income divided by its population, of about 51,700 in a year. The US's main industries are aircraft, automobiles, transistors, telecom equipment, and other industrial materials. Although it may seem that the US economy is heavily orientated towards the manufacturing of physical goods, 70% of its output actually comes from the services sector. Speaking of trade, one key element of the US economy is that the country is notorious for running huge trade deficits. i.e. the total value of goods flown into the country is more than the total value of those going out. The US is also home to the New York Stock Exchange, which is the largest stock exchange in the world. It is also home to the world's largest bond market, with a market capitalization of over $31 trillion and over $822 billion in bonds traded daily on average. Being the top economy in the world in today's globalized markets, any domestic event affecting the US also has the potential to affect markets around the world. Yes, even the foreign exchange markets. So, the US is home to the New York Stock Exchange, which is the largest stock exchange in the world. The US is home to the world's largest bond market. Monetary and fiscal policy. The Federal Reserve, more commonly called the Fed, is the US's main governing body when it comes to setting and implementing monetary policy. Is the US's main governing body when it comes to setting and implementing monetary policy. Monetary policy is just the way the Fed controls the availability and supply of money in the economy, and what makes the Fed special from other central banks is that its objectives are based on longer-term effects of its monetary policy. Monetary policy is the method the Federal Reserve controls the availability and supply of money in the economy. The Federal Reserve reserves the Federal Reverse. Whoops, I spelled that wrong. Reserve. The Federal Reserve's objectives are based on longer term effects of its monetary policy. The Fed has two main objectives. The first one is keeping the prices of consumer goods and services stable, and the second one is making sure that there is sustainable economic growth. The Federal Reserve has two main objectives. Keeping the prices of consumer goods and services stable, ensuring there is sustainable economic growth. In other words, the Fed just wants to make sure that your Benjis doesn't lose value and your mama and papa have jobs. Within the Fed is the Federal Open Market Communications, currently led by Fed Governor Jerome Powell, aka J. Powell. The FOMC is tasked to make sound and rational decisions on monetary policy. Is the Federal Open Market Committee. within the Federal Reserve is the Federal Open Market Committee. Federal Open Market Committee. FOMC is tasked to make sound and rational decisions on monetary policy. Sound rational decisions on monetary policy. The FOMC has two main weapons to use in its battle against inflation and achieve its long-term objectives: open market operations and the Fed's fund rate. Uses two weapons to battle inflation and achieve its long-term objective. Open market operations and Federal Reserve's funds rate. The Fed's first line of defense, its open market operations, is the buying or selling of government financial instruments like securities, notes and bonds. Open market operations. Buying or selling of government financial instruments like securities, notes and bonds. The Fed's funds rate, Federal Reserve's funds rate is the interest rate, that banks charge each other for overnight loans. Charge each other. Banks use these loans to make sure they have enough to meet the Fed's reserve requirements. Interest rate that charge each other. These reserves are kept at their local Federal Reserve Bank or as cash in their vaults. Banks use these loans to make sure they have enough to meet the federal one. Banks use these loans to ensure they have enough to meet the Federal Reserve's requirement. These reserves are kept at their local Federal Reserve Bank or as cash in their vaults. Now, the one accountable for fiscal policy decisions is the US Treasury. US Treasury is accountable for fiscal policy decisions. Fiscal policy is the use of government spending or tax collection to influence the direction of the economy. Fiscal policy is the use of government spending or tax collection to influence the direction of the economy. To encourage business activity, the US Treasury, for instance, could choose to lower taxes and to allot more budget on capital infrastructures like highways, schools, broadband, secret military, ninja bases, etc. On the other hand, if inflation starts to get out of hand, it could increase tax rates and cut spending. Right. Getting to know the USD. Did you know that the nickname buck for the US dollar originated from buckskin, which was a common medium of exchange when the earlier American settlers traded with the Indians? Even after paper currency replaced buckskin in the barter system, people still refer to the medium of exchange as bucks. Check out these Forex related properties of the buck. Liquidity is my thing. A ginormous amount of currency transaction every day involves the USD. Commodities like gold and crude oil also denominated in dollars. Gold and oil are denominated in dollars. During the Asian recession alone, the dollar takes up around 93% of all the currency transactions. To put this into perspective, take the New York Stock Exchange and the US bond market, for example. The value of the companies listed in the New York Stock Exchange amounts to $28.5 trillion, about 78% of the size of the world's $36.6 trillion stock market. Similarly, of the $82.2 trillion value of the global bond market, the US takes up $31.2 trillion. Every single transaction there in some way involves the USD. How's that for liquidity? The Fed and the US government believe I should remain strong. Over the past few decades, the Fed and the US Treasury have kept a strong dollar policy. They believe that the monetary and fiscal policy should be geared towards a strong exchange rate of the USD, as it would benefit the US and the rest of the world. The Federal Reserve and the US Treasury have kept a strong dollar policy. They believe that monetary and fiscal policy should be geared towards a strong exchange rate of the USD. So they want other countries to be able to pay. They want other currencies to have to pay more in order to get $1. So, for example, if $1 is currently worth 1.5 euros, then they want it to be 1.7 euros, for example, to get 1 USD. I think that's what they mean. As it would benefit the US and the rest of the world. Don't get how it would benefit the rest of the world. The currencies of many emerging countries rely on me to determine their value. How often have you heard the phrase, the dollar is the world's reserve currency? Well, the reason behind that is that some countries actually peg their currencies against their dollar. When a country does this, the government agrees to buy or sell its currency at a fixed price versus the dollar. While the government can increase and decrease the supply of money, they are still subject to having the equivalent amount of dollars in reserve. This process magnifies the importance of the dollar around the world because this means that some economies are entirely dependent on the dollar. If the dollar's value were to stage a massive fall, it would produce a wide-reaching negative effect in all other countries that have pegged their currency on the dollar. So some countries peg their currency against the dollar, not the collar. Important economic indicators for USD: non-farm employment change. Important economic indicators for USD. Non-farm employment change. The NFP employment report measures the change in the number of unemployed people in the prior month. Actually, you know what? Non-farm employment change, GDP, retail sales, consumer price index, personal consumption expenditure, University of Michigan consumer sentiment. So I'm going to leave this episode here for now. In the next video, we're gonna carry on from where we left off, which is here. So important economic indicators for the USD. And for now, I've just written the indicators themselves. But in the next video, we're going to carry on with reading through this and noting down what each of these indicators mean. And yeah, we're just going to go through the rest of it and then carry on with other countries, so Eurozone, United Kingdom, Japan, Canada, etc., etc. And yeah, so thank you all for watching, and I will see you all in the next video. Peace!